Hello, everyone, and welcome to the SBI Securities Weekly Wrap podcast. So, firstly, let's see how Indian markets closed in the week gone by. So, Indian equity benchmark indices saw a strong rally during the week, with gains mostly supported by index heavyweight banks as well as Reliance Industries. The benchmark indices scaled fresh record highs as Sensex and Nifty crossed their psychological levels of 79,000 and 24,000 respectively during the week. Both the indices ended with gains of more than 2% each on week basis to close at 79,033 and 24,011 levels respectively. The broader markets underperformed the benchmarks with BSE mid and small cap indices closing up by 0.4% each on a week basis. Global market cues were mostly mixed during the week. On the economic data front, the US weekly jobless claims for the week ending 22nd June came in lower than expected at 2,33,000 against the expectations of around 2,36,000 of weekly jobless claims. The rally in Indian market was mostly supported by positive expectations building up ahead of the upcoming budget in July. Also, one of the important developments for the Indian bond market was the inclusion of Indian government bonds in the JP Morgan Emerging Market Bond Index starting from 28 June, which will be spread over a period of 10 months till 31st of March of 2025. So overall, the development will be positive for both bond markets as well as banks. Now talking about the weekly sectoral gainers and losers on BSE, then except for BSE Metal and Realty, all the sectors ended positive on BSE for the week, with major sectoral gainers being BSE IT and BSE Oil and Gas, which closed more than 2% up each, while BSE Metal and Realty indices lost 2% and 2.4% respectively during the week. Talking about the weekly Nifty 50 gainers and losers, then Ultratech Cement, Grasim Industries, Reliance Industries, Dr. Reddy's Laboratories and NTPC were the top 5 gainers of Nifty 50 for the week, while IndusInd Bank, Cipla, Eicher Motors, Tata Steel and Coal India were the top 5 losers of the Nifty 50 index for the week. Taking a check on some of the key monitorables, then both FIS and DIS were net buyers for the week in cash market. The FIS net bought rupees 13,289 crores, while DIS net bought rupees 7,186 crores in the cash market. The rupee appreciated around 0.4% week on week at rupees 83.3 per US dollar. Brent crude remained flat during the week at $85.3 per barrel. Now moving on to some of the key corporate developments during the week. Then first, in case of Ultratech Cement, the company board approved the acquisition of 7.06 crore equity shares amounting to 22.77% stake in India Cements. So that will be positive for Ultratech Cement in medium to long term. Craftsman Automation signed MOU with Sunbeam Lightwing Solutions and Kedara Capital to acquire the whole or part of the business of Sunbeam. So positive for the company in medium to long term. JSW Infrastructure was also in focus this week as the company's unit JSW Ports will acquire a 70.4% stake in Navkar Corporation at Rs 95.6 per share. Post the acquisition, a mandatory open offer will be triggered for an additional 26% stake at a price of Rs 105.3 per share. Also, the company received a letter of acceptance from Southern Railway for the construction of a multimodal cargo terminal. So both the developments were positive for JSW Infrastructure in medium to long term. Sun Pharmaceuticals industry successfully completed the merger of Taro Pharmaceutical Industries with its subsidiary company. As part of this merger, Sun Pharma has acquired all outstanding ordinary shares of Taro other than those already held by Sun Pharma or its affiliates. So this was one of the development in Sun Pharma this week. JSW Energy's unit JSW Neo Energy has signed a power purchase agreement through its subsidiaries for 1,325 megawatts of renewable energy projects, which are likely to be commissioned in the next 21 to 24 months. So positive for the company in long term. Sona BLW Precision Forgings has received certification for traction motors for electric two-wheelers under the PLI scheme for the automobile and auto component industry in India from the government. So positive for Sona BLW in medium term. RVNL's JV with KRDCL has received a letter of acceptance from Southern Railway for automatic signalling work in the Ernakulam Trivandrum division in Kerala. So that will be positive for the company in short to medium term. SJVN's unit has signed an agreement with AM Green Ammonia India for cooperation on the supply and sourcing of renewable energy for green ammonia plants, so positive for the company. Brigade Enterprises launched a 6-tower residential project in Bangalore with a revenue potential of rupees 1,100 crores, so positive for the company in short to medium term. Asian Paints Singapore-based unit has completed the acquisition of a 23.4% stake in Egypt's SCIB Chemicals for rupees 34 crores and now holds 85.6% stake in SCIB. KPI Green Energy received a sanction letter for rupees 686 crores in credit facilities for a 200 megawatt solar project in Khavda, so neutral to positive for KPI Green Energy in short term. Bajaj Auto inaugurated its first overseas manufacturing facility in Manaus in Brazil, so positive for the company in medium to long term. Hero Motocorp will hike prices of select motorcycle and scooter models by up to rupees 1,500 with effect from 1st July to partially offset the impact of higher input costs, so that will be neutral to positive for Hero Motocorp in short to medium term. Indian Oil is aiming to increase its LNG portfolio from 7.8 MTPA to 20 MTPA by calendar year 2030. So positive for the company in medium to long term. Adani Green Energy is planning to invest rupees 2 trillion to build 40 gigawatts of renewable energy generation capacity by CY30. So positive for Adani Green Energy as well over medium to long term. Also, this week, Ambuja Cement's board approved the merger with Adani Cementation. The swap ratio was decided at 174 shares of Ambuja Cements for 1 share of Adani Cementation. So, this will also be neutral to positive for Ambuja Cements in medium term. So, these were some of the key corporate developments during the week. Also, on the calls front, we have given one pick of the day call on Rolex rings, which is basically for investment duration of 3 to 4 months. So Rolex rings we have given at CMP of rupees 2,523 for a target of rupees 2,775. Basically, the company is one of the top 5 forging companies in India in terms of installed capacity. It manufactures hot rolled, forged and machined bearing rings as well as automotive components across vehicle segments, including two-wheelers, passenger vehicles, commercial vehicles, off-highway vehicles, electric vehicles, industrial machinery, wind turbines, railways, etc. So it has a comprehensive product portfolio and strong manufacturing capabilities as well, with an annual capacity of 1,44,750 MTPA in forging and 73 million parts per annum in machining. The company has consistently maintained its growth momentum with focus on its margins. So over the last 5 years, company's sales have grown at a CAGR of 6.2%, while its PAT has grown at a robust CAGR of 21.5%. EBITDA margin has sustained at 22% levels over these years. There has been a consistent improvement in the company's balance sheet position as well, as it has net cash surplus of rupees 10.7 crores as of FY24 from a net debt of rupees 385 crores in FY19. Also, in the latest quarter, that is in Q4 FY24, the company saw rebound in domestic market, particularly in the auto component business, which can lead to strong tailwinds in FY25 if the similar trend continues going ahead as well. The company is also witnessing improved inquiries from its European customers, which is expected to reflect in numbers from second quarter of FY25 onwards. As well as it is also in talks with customers in US for bearing rings and auto components, especially in the hybrid vehicle and EV segments. And it expects to grow by 14 to 16% in FY26 over FY24 based on the current customer planning and order book outlook of the company. So Rolex rings, looks positive in short term, and we have given a POD call on this, that is pick of the day call on Rolex rings. Another call which we have given during the week is on Craftsman Automation Limited. This we have given under the pick of the week call segment. Where the investment duration is generally for 12 to 14 months. This particular call we have given at a market price of rupees 5,325 for a target of rupees 6,390. So Craftsman Automation manufactures several components and sub-assemblies on a supply and job work basis according to the client specifications in the automotive, industrial and engineering segments. It has 12 manufacturing facilities located across India. The company has acquired 76% stake in DR Axion India Private Limited for rupees 375 crores in February month of last year. So this acquisition has helped the company to increase its product offerings in the automotive powertrain segment. Dr. Axion is the major supplier of cylinder blocks and heads for leading PV OEMs such as Hyundai Motors, Kia Motors, and M&M. This has helped the company to increase the share of passenger vehicles and reduce its dependence on the commercial vehicle industry. The company has also recently signed an MOU to acquire the partial or complete business of Sunbeam Lightweighting Solutions Private Limited. Also, the company is expanding its manufacturing capacity through the organic route. It is setting up a large integrated foundry near Coimbatore, which will cater to all the three segments of aluminium products, powertrain, and industrial engineering. Besides, the company is also looking to cater to non-automotive sectors such as wind energy and capital goods. So, we are positive on Craftsman Automation also for medium to long term. Now, finally, after discussing all the key data points of which have happened throughout the week, now let's focus on what will be the market outlook for the next week. So next week, US market will see a couple of data releases such as manufacturing PMI, services PMI, May month factory orders, employment and unemployment report, as well as minutes of Fed's June month FOMC meeting. Also, some of the Fed officials will give speech in Portugal next week, which will be closely monitored by the market participants. In domestic market, manufacturing and services PMI as well as auto sales numbers for June month are the key data releases which are scheduled. At the current market juncture, we believe investors should focus on quality companies which are having decent risk reward ratio. Also, with the markets now entering the budget month, that is, since we will be entering July month next week, a lot of stock or sector specific action is likely to happen. For key corporate actions in next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. This was all about the weekly market podcast. Thank you everyone for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.